Hello, everybody. Drew, aka Catching Rockets here. Um, Today's video is going to be a little bit of a shorter one. I'm recording this right after the live stream I did last night. If you're watching this when it goes live tomorrow, um, so it's going to be a little bit shorter because that was about an hour and a half long video that I recorded live on YouTube. Somebody today in one of the discords I'm in asked a question about this stock, UROI, which is Uranium Royalty Corporation. Um, and the question basically was they're in a $5 call for an option that expires on the 18th of this month. So 16 days from right now when I'm recording. And they were surprised that even though this is ripped up, that their option contract hasn't moved very much. And, there's just so many things that factor into options. Excuse me, I have to cough. I'm also still sick. But with a contract like this, well, I haven't shown you guys the contracts yet, but when you're playing a penny stock and you're out of the money, right now it's only 30 cents out of the money, but I think when he asked, it was like right around 430-ish a share. So you're 70 cents out of the money on a contract that's expiring in 16 days. Like, what are the chances a penny stock covers that, 70-cent move to put it in the money in that time? Normally not very good. This is obviously pumping. I'm assuming, if we count it back, it's a week. Or actually, sorry, it's like 9 days if we include the weekend. So this pump is lining up pretty well with the, Russia invading the Ukraine, or the news leading up to it, which actually really bums me out to see. This is probably, pumping because of that news, which is disgusting in my opinion. Anyway, if we go over to the option chain, so this is what I was talking about. Expiration 18th of March, $5 call, nasty spread. And I'll explain that in a second here. And then you also have really low open interest for like all of these, except for this call here, which leads me to believe somebody must have tweeted something out, or somebody on YouTube suggested buying this, I'm assuming. But if you look at it, if you understand options, you need a buyer to sell your calls when you're done. And the total amount of calls and puts is 1,316. For me, I won't even consider trading options anything under 10,000. On this one call here, the open interest is enough. But the spread should scare you. So the spread is the difference between the ask price and the bid price. So the buying price and the selling price. If you enter this trade, at 25 cents, you're already down, what is it, like 10%? 5%? Shoot, sorry, I'm really bad at math. Let me check just so I can make sure that I'm right. I'm okay with having to... Yeah, so you're already down 25% in this trade. The minute you enter the trade, like based on how I trade, if I bought this at $25, I'm already stopped out at my selling price at $20 or 20 cents, $25. I stop out of trades somewhere between 10 to 20%. So before I even buy this, I'm already being stopped out of this trade. So as a trader, this should scare you. A massive spread like this, a 25% loss the minute you take the trade. It is a very cheap contract, so maybe it's a lotto play for some people, and this is just a gamble. I guess that's cool. I still wouldn't want to lose 25% of my trade the minute I enter the trade. So I wouldn't even be willing to take this as a lotto. But so anyway, I was just very, very surprised to see somebody in an option channel, and this isn't an insult to them, but it brought up like an education point or an education moment. Like, you should be scared of this the minute you look at it. Me as a trader, when I see a penny stock that has like $2.5 increments on options, unless unless we're trading like this at like $4.80 or $4.90, then I might consider buying like a $5 strike. But it just has to line up perfect. If this is trading at $3.50, like basically between this 2.5 and this $3 strike, like I wouldn't want to buy a that deep in the money contract, but I also don't want to buy one that far out of the money. So all of these things would scare me away from this trade before I even thought about possibly taking it. This massive spread would be the biggest one. You're already down 25% before you take the trade. There's not a lot of volume. And I guess the one thing I didn't really cover, so the open interest is the number of open contracts. So for every contract that's purchased, this gets a +1. For every contract that's sold, it gets a -1. So right now, there's a total of 1,412 open contracts at this strike price on this particular stock. $5 strike has more open interest here. Like this would make more sense to me. But again, this nasty spread, again, what? You're down, I think it's the same thing. You're already down 25% when you enter the trade. That's scary. Here you're down 33% the second you enter the trade. Anyway, so just stuff to look at as a trader. I wanted to share something else, and I'll put this down in the, I'll put a link down in the description, but if you're on, excuse me, got a cough again. If you're on Twitter, Theta Warrior, and I'll link his Twitter, but really, really great trader. He posts a lot of really good charts. He has a website with some pretty interesting stuff on it. If you go to products and education, he's got a whole education a whole education section, basically that covers how he trades. Like if the market's bullish, meaning like if SPY and Qs are bullish, and the particular chart you're looking at is also bullish, and flow sentiment is bullish, then he'll enter a full size position on a trade. That doesn't mean full port. That means full position for his portfolio size. And then so on and so forth. If the market's bullish, chart's bullish, flow's neutral, he reduces his position sizing. If everything's in different directions, there's no trade. Anyway, you can read through all of this on your own. But what I really like about his education section is the section he has on the Greeks. For me as a trader, when I was first starting out, I tried to understand the Greeks, like reading different places. None of it really made sense until I found Theta Warrior's education section. It's very clear and concise and broken down really well. So this is a great place to go and read about the Greeks if you happen to be an option trader. He also talks about stop losses and I've said in other videos of mine, if you're following traders and they're not talking about like your risk management, um, position sizing, any of that stuff, you probably want to really consider whether or not you're listening to somebody that's actually worth listening to. And when I say that, I'm not putting anybody down, but any trader that's worth their salt is going to tell you like the main things you should be worried about is risk management and position sizing, because without that, you're going to blow portfolios over and over and over again. And that risk management and portfolio sizing is so key in becoming a successful, consistently profitable trader. I will be covering videos on both very soon because it's a very important topic we have to talk about. But if you want to read what Theta has to say about it, he's got it here as well. And it aligns a lot with what I think as well. So we have very similar opinions on this. And then he just goes into different types of option spreads and credit spreads, iron butterflies, whatever, the wheel. And he's got a list of recommended reading. So anyway, that's going to be it for the video. Hopefully this helps some people out with understanding open interest. And and I'm sorry, this is not the total. This is today's total here. I apologize. So yeah, this is the total open interest for today. Anyway, with all of that said, everybody, have a good rest of your day. Take care. Much love. Bye.